All right. So when you got ready to set up your syndication, did you use a syndication attorney? How did you go about that to make sure everything was set up legally and appropriately? And
Well, definitely use an attorney. Well, so let me pick at the phrasing a little bit, because I feel like
Okay.
a lot of people ask about, well, how do you set up the syndication? And there's no like official setup process, in the sense of, it's not like I created my syndication last November and now here we are trying to do deals. It's really set up on a per deal basis. Now, what you can do, which this is not related, I mean, it's related, but it's not important for tonight, but there are such things as funds, which you can set up beforehand and do all of that. And a fund is basically just like a multi-property syndication in a way. But for a syndication, it's actually per property. So I can give you, well, for instance, is the Jacksonville deal, it goes under contract back in June. At that point, you're doing your due diligence, running through the rent roll on T12 and all that stuff, and going on site and doing all of that. But at the same time, you do contact your SEC attorney to then begin setting up the different entities you need to make the syndication run or work. So, yes, you use an attorney, and look, I'm not an attorney, so I don't know all the exact little details. I definitely know there's some SEC rules you have to follow, and if you don't, you could very much be in. Well, you could be in some trouble. I mean, you're not going to go to jail, is what I've been told, but
Well, you can.
you could. But I mean, like, apparently, mostly they just ban you from raising money again. So it's bad, but it's not jail bad,
yeah.
And fines.
Yeah.
And fines. That's true. Yeah.
So let's talk about you being an LP. So how did you go about deciding, hey, I want to be an LP on this deal? What kind of research did you do on not only the GPs, but the deal itself and that? So let's talk to us about that.
If I could do it now, well, so I am actually. I'm trying to get into another one, but I feel like my advice now would be different than what I did actually. But basically, the
Let's
research
take your
was.
advice now about.
Yeah. Well, we can dive into
Yeah,
that. And some of it's kind of technical, so maybe
Yeah.
may bore everybody. But I mean, for me, it was really a matter of, being the engineer, right, the A student. What I did was dive like I do in everything, like dive as deep as I could into how it actually works. And so part of that was understanding syndications, what they are, all the different things we're going to talk about tonight. But beyond that, as far as like research on the operator. Operator is the same thing as a GP team or sponsor team. There's multiple different words here, and actually they're slightly different, but for our purposes, they're the same thing. So as far as researching the operator, it really became, for me, I started focusing in on, and a few people know this, on asset management, because it just occurred to me of like, that's really where the money's made, right? Like anybody can, any idiot can get a bank to loan you money and throw it at a property, but that's one thing. But to actually make it to where you get the value add plan done and executed, and you get rents up and you get expenses down and all that stuff, it takes some real skill, some real business savvy. So for me, it was a matter of one of the deals I invested in was literally I invested with the guy who wrote the book on asset management. And I mean that literally because it's only one that I know of,
Yeah.
and he wrote it. So I met him at a conference last year, and we had a great little dinner or whatever. Stayed in contact. Different. The thing about me is I can annoy people. I can be in their space. So like. That's what I did, So like he would
We love you. Dave.
Yeah.
We love you.
he posted on he'd post on social media, I have this Zoom meetup, whatever. I was there, So I just made sure I was always there. So it kind of built the relationship that way. And then when he brought a deal out, by then I had enough, certainly technical understanding to know we're looking at the equity multiple and the IRR. He's a little bit light on cash flow for his deals, but with my station in life right now, I'm okay with that. So. That was that's basically how it worked. I mean, it's really just kind of getting to know people. I mean, it is a people business, right? So getting to know him and understand how he thinks.
And then because I know you love underwriting deals.
Oh yeah, I looked at his stuff. Yeah.
So I'm sure you looked through it.
Well, I looked
right?
at it too as educational, because I mean, this. I think some people will tell me I'm conservative, and I'm trying not to be. I'm just trying to be accurate, right?
Yeah.
But so I took it as a learning lesson in some sense. Like I looked at his stuff and I was like, first off, it's in Tucson, Arizona, so it's a little different than Nashville. I'm looking at Nashville numbers. Tucson's different,
Yeah.
and so it was like learning the market in that way, but also seeing like Whereas I might think like, oh, well, let's assume this much vacancy because we're doing all this value add. He's tightening it up a little bit because, from what I would project.
Right.
Because he knows he's got, I think, 9 deals in that area now. Like, he knows how he can make it happen, right? Him and his property management team have literally done this on 8 different properties and now a 9th one. So, yes, I did look at his underwriting, but I didn't scrutinize him like, why is this that way? It was more of a learning opportunity for me is how I looked at it.
Yeah.
So.
Right. And so now that you're kind of on the GP side,
Mm-hmm.
how are you looking and vetting LPs that want to come in on your deals?
Well, that's a good question. I feel like that's a running inside joke for this group, honestly. So there's a syndicator locally that had some problems with an LP. For me, I guess ultimately I'm not in that position yet. You know what I mean? He's in the position where he can raise 20, 30 million, so he can be picky. I can't necessarily be that way yet.
Yeah.
That said, I mean, if somebody's a total jerk or like we just don't get along, I mean, I'm probably not going to pursue that relationship enough to get them to give me money, to be honest. So it's, it's really just, I mean, I've kind of likened it to dating, really. I mean, like everything in real estate kind of seems that way. Like, you're just building a relationship, no different than you would with anybody else, a friendship, a romantic one, whatever. Right. So it's just in this case, the core piece of it is business and, investing their money wisely.
Yeah, I think Drew was talking about Benjamin Inman, who he spoke at our RIN meeting last Thursday. So, he's kind of on a different level when it comes to multifamily investing, so for him.
Only 500 million assets under management. So.
Yeah, he used to have 600, but he sold some stuff. But, so just a small amount, right? But he's the kind that can go to New York City and basically take 2 meetings, one 10 minutes in a Starbucks and have somebody write him, $7 million check, right? So
7 minutes.
Yeah, 7 minutes. Okay.
My favorite part of the story:
Sorry,
7 million in 7 minutes.
Yeah, 3. 3 minutes too long there, but yeah. So it's private equity. That's totally different, ball game. But one of the story we were just talking about it, and he thanked me for bringing it up last Thursday. Mm-hmm. Not necessarily in a nice way. I mean, he was fine with it, but he invited, or he had an LP that came in on one of his deals. What he didn't realize is that LP, who was bringing like 400 or 500,000 to the deal, he went out and took a loan out for that much money to put into his deal. So that's one of the things you don't want to do.
Definitely don't do that.
And you don't want to accept anybody that has went out or brought in their last $100,000 they ever had.
Yeah, I mean, on that point, there's some GPs that I've listened to where they will actually advise from the GP side that you need to make sure your LP doesn't, that you're not taking even the bottom 50% of their liquid money. So like if they only have 100, the most you'd want to take would be 50. Just to make sure you're leaving them in a solid place. So I mean that's one of those things in the back of my mind. I haven't really executed that yet. I mean, it's not like I've taken everything everybody has, but like it's not something I have to think about yet. Yeah. But that's just a small nugget of advice I got.
Yeah, I got a couple of dimes still to give you, so
okay.
I'm good. So I haven't quite taken everything, but so far, Lisa, questions? Go ahead, Lisa.
So, Drew, you mentioned you took down the Jacksonville deal and then you raised the funds. So how did you? Yeah.
That's the scary part of syndication. Yeah. And actually, on that note too, like, Brian, everybody here who's a multifamily broker would say this, that like certainty of close is very important to brokers. And so that's actually one of the things that I had heard last year was actually even some of the big guys like, rich dad level type guys were getting no's on deals because they were syndicating instead of having the money ready to go. And that's why some people use funds now because the money's sitting there ready to go. But yeah, I mean, that's definitely the scary part. Like you get it under contract first and then you've got, maybe 60 days to get the money raised, which, it just depends on, I know some people, they can raise 10 million in a day or two or whatever, a couple texts. I think somebody told me they raised 400,000 in 3 days and a couple texts, something like that. But,
Is that Benjamin again?
No, that's Mike actually.
Oh, yeah.
Point him out,
Yeah.
So, it's scary, but it's kind of part of it. And it's why you need to really be getting your investor base prepped beforehand. So part of that I am not the one to talk about this really, because I've kind of just started on that part. I was more focused on deal finding, but for capital raising, like I know the mechanics, right? And it really is building your investor base beforehand. So building those relationships, getting them in your CRM, and then touch points somehow. Like I've kind of just settled on newsletters for now, and then and some maybe like some blogs here and there. But there's people who do like every 2 weeks, I believe, and they have all kind of different patterns. But
that question that you just asked, that topic, Mike's going to be speaking on next.
Yeah, that's
on
true. Yeah.
How to raise capital. So we'll come back to that question.
Yeah.
Right, Mike? We got a whole 50 minutes to talk about it, or what?
Sure.
Yeah. Go ahead, sir. I think you had a question.
Yeah.
Oh, wait. Okay, Elliot.
Yeah, I was just curious. As a limited partner, what kind of guarantees or protections do you have against any kind of loss?
There's no guarantees.
Okay.
Actually, that's a good point.
You could lose.
You can lose. So you can lose exactly what you invested in it. So I guess there are no guarantees, and that's something that should be said. And I feel like actually that's a good point that we brought up, because I feel like a lot of people who want to look at the LP side don't understand that there are zero guarantees. However, because you're a limited partner, there's limited liability in the sense of you're not signing on the debt. If things go wrong and the sponsor team screws it all up and the property gets repoed or whatever, you're going to lose your investment most likely. But you're not going to have to pay back anything. You're not, it's just you just lose your investment. So it's, there's no guarantees, but you do have. Your loss is purely just what you put in. That's what's at risk. And like always, don't invest what you can't, stomach losing. Sure. So.
Yeah. You're not tied to any of the bad boy clauses that lenders have. So as an LP, Go ahead.
So moving over from the residential side, did you have a key principle in your team or in your sponsor team to be able to show the banks that you were capable of taking down this property?
Yes, yeah. So not necessarily to show the banks, although I do, I do that, and that. I do like have someone or have a couple people, actually about 3 or 4, but depending on the deal size, right? There's different people do different kinds of deals. It wasn't so much that I like go to the bank and I'm like, hey, here's my KP. But it was, as I built those lender relationships, they made sure to know that I needed a KP because I don't have the 2 years experience and all the stuff they're looking for yet. And that's actually I even leverage that with my investors, right? Because people who know me well, like friends or family or whatever, they might trust me, but somebody who doesn't know me, like, why would they invest in somebody who's, Jacksonville's my first deal. Why would you invest in that deal? Well, the reason the guy did, or one of the guys did, is I can prove that here's the sponsorship team, here's their experience, here's their expertise. They've got 1,600 units in Jacksonville already, so this is just adding another 200. It's like no big deal to them, right? So, you can that's kind of the name of the game in real estate is leverage, I guess. And in multifamily or in syndications, it's about leveraging your team as well. So definitely leveraging the KP. And, I use that more for brokers, I think, than, like, if I'm talking to a new broker, I'm going to definitely I'm going to name drop. Right, you kind of have to, because otherwise it's like this guy's not going to close. But if I say, hey, Mike Taravella is going to be a KP on this deal, and they're like, oh, Mike, okay, he's got he was here and he was here, he did this. Okay, well, all of a sudden that gets me in the game. So
he's brought up 2 very, very important pieces, especially when you're dealing with brokers. So for me as a multifamily broker, if I'm representing a seller, right, and I'm the one that's representing him, the 2 things that are going to be very key that, in my fiduciary duty to him too, is to basically get a real estate resume. So what Drew just really talked about is, okay, what's your experience? What properties have you purchased? Who's on your team, right? And what's their experience, right? And then you're looking at how often in the past have they closed on deals that they've won under contract on. Right? Because a seller of a property, so, I had a seller on a property that we recently just closed that we took a lower priced offer because those guys we knew were closers, right? They have closed for years on properties that they have purchased versus somebody that's a, first time buyer. So you'll see that out there a lot, where a seller will take a lower priced offer with somebody that's got a real strong team and that we have pretty confident faith that they're going to close on that deal. Because the last thing the seller wants to do is have to continue listing that thing if it falls out, right?
Especially in this environment, right? Because the valuations are going down.
Yeah,
so.
exactly. So from that stuff. So Yeah.
Yeah.
Yeah, and we talk. So there's you go back into my office back there's like 180 names or something, right? But there's times when names get taken off of that board, right? Just because they seem like pretty decent people, but they don't close.
You don't want to waste your time, right?
Yeah,
That's
exactly.
what it comes down
I'm
to.
just not going to waste my time with them, right? So those points that he just brought up are very, very key to understand and make sure you've got a good team put together, and that those that you put on your team also have closed properties.
And it's probably worth saying that it's not just syndications either. Like if you're even if you had the money and just were going to go buy a 24 unit on your own, you still need to have that somebody that's going to be partnering with you to have that experience.
Yeah.
For the brokers and also for the lenders, which would be the next part of that conversation.
Yep. Yep.
Where I mean, obviously every lender is a little different, but for agency especially, you have to have a net worth equal to the balance of the loan. I mean, I don't have that, especially on a $37 million deal. So,
And 2 years of
of experience executing that particular type of business plan with that asset. So you can say I've been buying office for 2 years, and you try to buy multifamily, you got to restart you got to get a team member or something, because it's not going to count. So,
and they look at I've owned a 20 unit.
Right.
Now I'm buying 200.
not going to work.
Not going to work either, right? It's
Yeah.
got to be
So-
similar size.
So multifamily investing, commercial investing is definitely
Yeah.
a team sport.
Yeah,
You're
especially
probably not
if
going to do
you're-
it on your own.
Yeah, especially if you're on the agency side, right?
Yeah.
Agency is they're very, very, very picky, and and it's because that kind of debt is non-recourse debt, right? So means that if they do anything, they're just going to you hit any of those bad boy clauses, they're only going to take the property back. They're not going to come after you.
Yeah, it's not personally
But-
guaranteed.
Yeah, but because of that, then they're very, very, very picky because they only take like 0.00001% of properties ever come back to them because of that. So, Trevor.
Is there a resource? Like I just bumped into Dunn and Bradstreet today. I mentioned that question to you earlier. Is there any resource that can find and help me research on people's backgrounds financially, commercially, business-wise?
Like you mean as an LP investing in somebody's deal?
Like,
I mean, I don't know if there is a resource. I mean, the way I've gone about it is again, it's relationships, right? So you ask around. My experience so far has been that the multifamily world is very small. There's not a lot of people that are buying, especially when you're talking about 200 units. Not a lot of people are in that space. So if somebody's really like sort of a crook, essentially, they're probably not going to last long. But even if they did, I think you can find the connections. And that's why, for me personally, why I like going to these conferences and meetups and things like that, is I get kind of that. Well, first of all, I get maybe face to face with these people. But even if I don't, I get to meet people who, are investing with them and what they. What their thoughts are. Like it's even happened like, 2 people were moved where like somebody I know went to the best ever conference, ran into an LP who was like, I'm not happy investing with this sponsor. And like, he told me about it and I was like, well, that's interesting, so like it's kind of just that. I don't think, unless, somebody else knows of something, but I don't know of like a single resource, like a database or anything.
It shouldn't be on Google News for the bad reasons.
That's true, yeah.
And I think the SEC has like investigations. It wouldn't be active, but like kind of closed out. So
'cause that's what Dunn and Bradstreet does, is right? Business,
Yeah,
credit.
Right,
As long
yeah.
as it's been reported,
Yeah, I guess in these deals.
because it's not a,
People's cash.
Dun & Bradstreet is
Right,
not a
not checking
governmental entity. So
Yeah, I was
they're,
just wondering if there's a resource.
they're just a
similar to
for-profit credit reporting.
There is a platform where I guess syndicators can go and sign up and kind of put their book of business on there, and so that's your way of saying, oh, the syndicator has been in the business for so many years. The name escapes me right now.
Kyle.
Drew, when you're finding LPs, what is your time frame that you want to cash them out?
Well, that depends on the deal, doesn't it? But generally, like I can tell you my ideal, like the North Star that I'm always looking for. I want to get to infinite returns, which means no money invested in the deal, but we're still cash flowing, we still own it. So preferably, I would love to do that in 3 years. So if we buy it, we do what's called the value add strategy. So we renovate, improve, the property, we reduce expenses, whatever. We increase the NOI so the value of the property goes up enough. We can then do a refinance, pull all that invested capital out and redistribute it. That's my North Star. And I want to do that in 3 years. That's always what I'm looking to do. I mean, the reality is in this, you know, in this market now, like I don't know many people that are actually able to pull that off, but that's what I'm looking for.
Well, I guess
So-
the better question is, if you're coming at me to be an LP,
Mhm.
what are you telling me?
Oh, yeah.
And I'm saying,
Okay.
hey, when do I get my money back?
I would say 5 years. I underwrite everything to 5 years, and you know, if we can do it faster, great. I mean, yes, it is great in some ways, but also it just depends on the strategy too for the LP, right? So, but yeah, I would just say 5 years.